Hello again. Welcome to another market update. This is quite a market to navigate, right? There's a lot of sea changes happening, and want to share a couple things with you today. One, some sea changes we're experiencing in our industry, our company specifically, and then hopefully give you some perspective that maybe help while you're out there. And it seems like everything's getting more expensive in our lives, and home prices are going up, and rates are going up, and everything and every corner of our life is more expensive. So how does that translate into decisions we need to make about buying a home in this market? I'll do my best to answer those here, give you some news of what to expect with the market and how to maybe navigate through that a little bit. We are going to have some more videos coming out next week on a cost of waiting analysis. I've gone back through the last 3 years of those and kind of send some trends and some perspective there, and hopefully give you some feedback that'll be helpful on that, and then some other releases of some programs we are working on to help you just be that much more competitive in the market. And we'll talk about one of those today. So our personal sea change is that you've probably seen in the news already how many thousands and tens of thousands of layoffs our industry has had so far at some of the major mortgage companies out there, and companies being sold, big mortgage companies. RPM is one of them, several others, $10-12 billion companies, and to a surprise to us, the mortgage company I was at, Mid-America, I own a branch, right, of a much bigger national mortgage company, right? We plug into mortgage companies on the back end to do fulfillment, capital markets, and servicing to serve our clients the best that we can, right? And that's our commitment to you, is to partner with those that have a good competitive price, but also have the programs, the products, the people to make sure that they can fulfill on the back end, right? And so they sold, and that's just what happened. So some tough decisions had to be made. Luckily, we have always have mortgage companies on deck, vetted, ready to move because these kinds of things happen in the industry. It's only twice it's happened to me in the last 20 years where a big surprise happened, but it did. And so it's a little bit bumpy in the move. It was not something we chose. It was chosen for us. And there are some technical challenges. If you haven't been able to get a hold of us on the phone, I apologize for that. We do think we have those fixed now. It was routing to servicing and Mid-America, and anyway, challenges, and they don't have retail anymore. And anyway, it's a weird deal. But we are at Cross Country, fantastic $80 billion seller servicer, actually just Mid-America, but better on the back end. We're happy and excited to be able to plug into them and offer the same services. All of retail has moved. So our underwriters, processors, setup, my branch, everybody, it's the same. It's just moved over, and there's some different technical stuff. But if you have some challenges getting a hold of us, I do apologize. We should have that fully fixed in a week. There's some systems that we're changing over. If you've been using HomeBot, that is getting updated, and you'll get maybe an extra email about that, and you may get a couple of double update emails. And again, I can't apologize enough for that, but it's just the par for the course in these kinds of situations. But we're here, the team is here, and we're ready to help you. All right, this is the if you have any questions on that, of course, reach out, let us know. We're here to answer those questions. Set up a call with me. We want to make sure you understand what's going on there. But business as usual right now, for the most part. This is the live trading of mortgage-backed securities. You've seen this a lot. If you've been watching these videos, this is a price chart, lower price, higher rates since the beginning of the year, really the end of last year. It started when some of the inflation the terminology started to go from transitory to maybe a little more permanent, right? Which, if you've been watching these videos, we knew it was not transitory over a year ago. But regardless, prices have fallen 700 basis points. Rates have gone up over 2.5%, according to FreddieMac.com, since the beginning of the year. They're one of the agencies that track them. So we have hit a local low in price, which is a good thing. We have some support here at this support level. You can see we bounced off of it and bounced back up. We hit it again today and bounced back up. So we're in a range here in the short term. In the long term, we are still in a bear market, right? And we've fallen off of a cliff in the last several months. We want to hopefully sustain here over this week so we can have this be the local low for the next 30 days or so. Anything can happen in the world that can change that, but currently we should be in this trading range for the next few weeks. And so hopefully when you get by the time you get a contract, we'll be in this same range with an eighth or a quarter either way of this of the area that we're at now. But we will keep you posted on any major changes there. But the question is, where are rates today? Make sure you know where to check those, and then where have they been historically? Because as things get more expensive and the market gets heated up, what do you do? So remember to go to FreddieMac.com. Again, they are an agency site, not a marketing site. They track all locked rates around the country every single day. right? Not quoted, but locked rates for 760 credit score borrowers with 20% down or more. Right now, the national average, and every Thursday they average it and put it out. So it'll come out, I think, today when you're getting this. So there'll be a new one today. And so that'll be, right now it's 5.3% with about a point paid, right? In Texas, you got higher property taxes, title policies, and interest rates because of how we securitize. No sales tax on real estate, no income state income tax, all of that stuff. So it makes a little bit higher price, around mid fives with a point right now on average for those price points on conventional loans. Okay, so that's a good way to know what's going on. As you see this move up or down, you will see interest rates move up or down as well, so you can have a pulse on what's going on in the market. And if you look, today's 30-year, this is from today, is 5.47. This is Optimal Blue. It's an aggregator of lock loans. 5.47 with a point. So that's today's rate. It's a little higher than the average because if we zoom in, right, prices are lower than they were a week ago, right? So when prices go lower, rates are up. That's how that works. So here's some good perspective I hope will help. And I'm going to tell you about a program that's going to help you too. One, remember this, as rates get up higher, and I have to be reminded of this as well, we are still in the lows, right? When I got into this business in 2001, rates were at almost 9%, about 7.5%. A little before I was in, it's about 8%. And then the refi boom of the early 2000s was at 5%, right? We didn't get down below 5 really significantly until 2008 and 9, right? Because when recessions happen, actually you typically see interest rates drop. So, it's weird to say good news. Recession, as we're in inflation now and it looks like recession is coming, you will see in the next 2 to 4 years, maybe sooner, you'll see a natural lowering of rates. So if you do buy a home now and you want to have a lower rate later, there's going to be an opportunity to do that, right? So this only goes to the end of 2021 or the beginning of 2021, right? And so now we've kind of come back up in this range where we were in 2019 and where we were in 2008 and 9, right above that 5% mark before the refi boom of 2010 to 13 started, okay? So historically, you're still in a great spot. A little higher than where we've been in the last couple of years, but it's okay. You're okay, right? It's just a natural cycle of things that happen, and it's not fun to be in it. But you're going to be all right. The big issue is, of course, that the prices are higher too. So we're going to get to that next week. But for now, I do want to tell you about a program that we're going to be taking you all through. You're going to be seeing disclosures if you are pre-approved right now. If you're not, we'll be taking through this process anyway. But if you're pre-approved, we're going to be updating your pre-approval. Here at Cross Country, we have a new program called Cash Plus. You have to get what's called a fast track pre-qualification, which is it's a full underwrite, right? One, it allows you to close in 15 days, so it can cut about 10 days off the closing time. Two, it allows you to qualify for our where we pay cash for the house, right? So you can have a cash offer if you need it. We're going to go into more details of that next week as well, but I want to let you know that if you see the team reaching out to you and they're asking you to sign a few disclosures, that is, so there are certain regulatory disclosures you have to sign to have an underwriter look at it, fully approve it, then qualify you for the cash program. So if you're out there struggling, making offers, and you're just like, my God, it's so hard, right? There's opportunities for you to, one, we can just pay cash for it and you have up to 6 months to buy it from us at the same contract price, right? Or two, just have it as a backup. So many of our clients are saying, look, I got financing, but I know you need a guarantee to close in 15 days. We're going to close in 15 days. And if we don't, here is the proof that you will get cash. You seller will close on that day, no matter what. You accompany that with, you qualify for our perfect purchase guarantee, which is we match earnest money up to $5,000. You've got a very competitive offer in front of you. And what's good about the cash offer is you get, if you have to bid over list, you don't have to worry about coming up with that extra money, right? If you have the cash offer and then buy it, you got to sell your home and wait for that and buy it later, right? So there's many good opportunities. It's there, depending on your situation, will determine exactly how that program will fit you, but we're going to be taking you all through our fast track pre-approval process so you are fully underwritten and can close in 15 days with no financing contingencies to make you as aggressive as possible, competitive as possible, and also if you qualify for it, we're going to get you a cash plus offer where you can get the boost. Again, where we're a backup no matter what. you're closing, they cash in 15 days. If you can't get financing for, it's just kind of a backup to help them, to help you be more competitive. And then the full one where we just straight up buy it cash for you. Okay. And then you have 6 months to buy it back. So more stuff coming on that, but I hope that's helpful. We're fighting every day with your amazing realtors that you're working with to get you the edge you need to win. So if you have any questions, let us know. We're here for you. We're in your corner. We're fighting for you, but we're just a phone call away if you need us. Have a great day. Happy hunting out there, and there's a lot of great opportunities. So stay in the hunt, and we'll talk to you soon.